Goldman Sachs, a name that resonates through the corridors of power and finance. It's not just a company, it's an institution, a symbol of financial prowess and influence that has shaped the economic landscape for over a century. The name alone evokes images of power, wealth, and influence. When people think of Wall Street, Goldman Sachs is often the first name that comes to mind. It's a firm that has become synonymous with the very essence of financial success and corporate dominance. It's a firm that has been whispered about in hushed tones for decades, both feared and envied in equal measure. The corridors of power are filled with stories of its influence, its reach, and its ability to shape the destinies of nations and industries alike. For over 150 years, Goldman Sachs has stood at the very heart of global finance, shaping markets and influencing economies with a reach that extends far beyond Wall Street. From the bustling trading floors of New York to the financial hubs of London, Hong Kong, and beyond, Goldman Sachs has left an indelible mark on the world of finance. From humble beginnings as a small trading firm, Goldman Sachs has risen to become a titan of the financial world. Founded in 1869 by Marcus Goldman, the firm started as a commercial paper business, providing short-term loans to merchants. Over the decades, it expanded its services, navigating through the complexities of the financial world and emerging as a leader in investment banking, securities, and asset management. Its alumni populate the highest levels of government and business, its tentacles reaching into every corner of the global economy. Many former Goldman Sachs employees have gone on to hold influential positions in government, shaping economic policies and regulations. This revolving door between Wall Street and Washington has only added to the firm's mystique and power. But this immense power has not come without a price. The firm's aggressive strategies and relentless pursuit of profit have often put it at odds with regulators, politicians, and the public. Its role in the financial crisis of 2008, where it was accused of contributing to the collapse through risky mortgage-backed securities, has left a lasting stain on its reputation. Goldman Sachs has also been at the center of some of the most controversial financial scandals in recent memory. Its name synonymous with the excesses and recklessness that led to the 2008 financial crisis. The firm has faced numerous legal battles and regulatory fines, yet it has managed to weather these storms, often emerging even stronger. Today, the firm remains a lightning rod for criticism, its every move scrutinized by regulators, politicians, and the public alike. Despite its efforts to reform and adapt to a changing financial landscape, Goldman Sachs continues to be a symbol of both the power and the perils of modern finance. This is the story of Goldman Sachs, its meteoric rise, its stunning falls from grace, and its uncertain future in a world grappling with the consequences of unbridled financial power. As we delve deeper into the history and operations of this financial giant, we will uncover the secrets behind its success, the controversies that have plagued it, and the challenges it faces in an ever-evolving global economy. The story of Goldman Sachs begins, as many American tales do, with an immigrant's dream. It's a tale of ambition, perseverance, and the relentless pursuit of success. In 1848, Marcus Goldman arrived in New York City from Bavaria, Germany. He was part of a wave of immigrants who left their homelands in search of a better life, driven by the promise of the American dream. He was just one of millions seeking opportunity in the bustling metropolis. New York City, with its crowded streets and towering buildings, was a place where dreams could be realized, but also where many dreams were crushed. Unlike many others, Goldman wouldn't find his fortune in factories or on farms. The Industrial Revolution was in full swing, and while many sought work in the burgeoning factories or toiled on farms, Goldman had a different vision. His trade was money itself. He saw the potential in the financial markets, understanding that money could be made not just by producing goods, but by facilitating the flow of capital. In 1869, after years of peddling promissory notes to local businesses, Goldman opened a small office on Pine Street in the heart of Manhattan's financial district. This was a bold move, as the financial district was the epicenter of economic activity. This modest operation, buying and selling short-term debt, was the seed from which the Goldman Sachs empire would grow. It was a humble beginning, but Goldman's keen understanding of finance and his ability to build relationships set the foundation for future success. Goldman's son-in-law, Samuel Sachs, joined the firm in 1882, and the company officially became Goldman Sachs. This partnership brought new energy and ideas, helping to expand the firm's reach and influence. The firm's early success was built on a simple but powerful principle: providing access to capital for businesses looking to grow. They understood that businesses needed more than just money. They needed guidance and support to navigate the complex financial landscape. They became trusted advisors, not just financiers, and this reputation for discretion and reliability would prove invaluable in the years to come. As the firm grew, so did its influence, shaping the financial world in ways that would be felt for generations. The early decades of the 20th century were a time of both immense opportunity and terrifying volatility for Goldman Sachs. The firm rode the wave of American industrial expansion, financing the rise of railroads, utilities, and manufacturing giants. But they also faced their share of challenges, navigating the treacherous waters of economic panics and market crashes. The 1929 stock market crash and the ensuing Great Depression tested Goldman Sachs like never before. The firm, heavily invested in the booming stock market, suffered significant losses. Yet it was during these dark days that Goldman Sachs proved its resilience, adapting its business model and emerging from the crisis leaner and more diversified. Goldman Sachs learned a valuable lesson from the crash: don't put all your eggs in one basket. The firm expanded its focus beyond trading and investment banking, venturing into new areas like asset management and underwriting. This diversification would serve them well in the decades to come. The latter half of the 20th century saw Goldman Sachs transformed into the global powerhouse we know today. This transformation was not an overnight success, but a result of strategic decisions, relentless ambition, and a keen understanding of the evolving financial landscape. The firm, which started as a small commercial paper business, gradually expanded its horizons, embracing new opportunities and navigating through the complexities of the financial world. The firm rode the wave of globalization, expanding its operations across the world and cementing its position as a leader in investment banking, trading, and asset management. This global expansion was marked by the establishment of offices in key financial centers around the world, from London to Tokyo and from Hong Kong to Frankfurt. Each new office brought with it a deeper understanding of local markets and a stronger global network. Goldman Sachs's success was built on its people. The firm recognized early on that its greatest asset was its workforce. By investing in talent and fostering a culture of excellence, Goldman Sachs was able to attract and retain some of the brightest minds in the industry. These individuals were not just employees, they were the driving force behind the firm's innovative strategies and groundbreaking deals. The firm cultivated a culture of intense competition and unwavering loyalty, attracting the brightest minds from the best universities. Recruitment drives at Ivy League schools and other prestigious institutions became a hallmark of Goldman Sachs's strategy. The firm sought out individuals who were not only academically brilliant but also possessed the drive and determination to succeed in a high-pressure environment. These ambitious young men and women were drilled in the art of the deal, learning to navigate complex financial transactions and generate massive profits for the firm and its clients. Rigorous training programs and mentorship from seasoned professionals ensured that new recruits were well prepared to tackle the challenges of the financial world. They were taught to think critically, act decisively, and always keep the firm's interests at the forefront. This period also saw the rise of mergers and acquisitions as a defining force in the business world. Goldman Sachs played a pivotal role in this arena, advising on some of the most significant deals of the time. The firm's expertise in structuring complex transactions and its ability to bring together disparate parties made it a sought-after advisor in the world of corporate finance. Goldman Sachs was at the forefront of this trend, advising on some of the largest and most complex deals in history. The firm's involvement in high-profile mergers and acquisitions not only solidified its reputation as a leader in the field, but also contributed significantly to its financial success. These deals often involved billions of dollars and had far-reaching implications for the global economy. Their bankers became known for their ruthlessness and their uncanny ability to close deals, earning them the moniker Masters of the Universe. This reputation was built on a track record of success and a relentless pursuit of excellence. Goldman Sachs bankers were not just participants in the financial world, they were its architects, shaping the future of industries and economies with every deal they closed. The early 21st century saw Goldman Sachs reach new heights of profitability. But this period of unprecedented success would also be marked by controversy, culminating in the firm's deeply contentious role in the 2008 financial crisis. As the housing bubble inflated, Goldman Sachs, along with other Wall Street giants, bundled risky subprime mortgages into complex financial products known as mortgage-backed securities. These securities were then sold to investors around the world, with Goldman Sachs reaping enormous profits while downplaying the risks involved. When the housing bubble burst, these securities became toxic assets, triggering a global financial meltdown. Goldman Sachs, despite profiting handsomely on the way up, was not immune to the crash. The firm received a massive $10 billion bailout from the U.S. government, a move that sparked outrage among many Americans who blamed Wall Street greed for the economic crisis. If the 2008 financial crisis dented Goldman Sachs's reputation, the 1MDB scandal threatened to shatter it completely. This sprawling multi-billion-dollar fraud involved the misappropriation of funds from One Malaysia Development Berhad, a Malaysian government-owned investment fund. Goldman Sachs's role in the scandal centered on its work raising billions of dollars in bonds for 1MDB. U.S. authorities alleged that Goldman Sachs bankers, motivated by greed and a culture of lax oversight, overlooked red flags and facilitated the looting of billions of dollars from the fund. The scandal sparked international outrage and resulted in billions of dollars in fines and penalties for Goldman Sachs. It also led to criminal charges against several former Goldman Sachs executives, tarnishing the firm's reputation and raising serious questions about its corporate culture. Today, Goldman Sachs remains a giant of the financial world, its tentacles reaching into every corner of the global economy. But the firm is at a crossroads, facing increased scrutiny from regulators, skepticism from the public, and a rapidly changing financial landscape. The challenges facing Goldman Sachs are significant. The firm must navigate a world of low interest rates, geopolitical uncertainty, and increasing competition from tech giants encroaching on its turf. It must also rebuild trust with the public and demonstrate a commitment to ethical conduct after years of scandal. Whether Goldman Sachs can adapt to this new reality remains to be seen. The firm has a long history of reinventing itself, but the stakes have never been higher. The future of Goldman Sachs may well depend on its ability to learn from its past mistakes and chart a new course for the future.